Market extends gains, Nifty hits all-time high. 40 out of 50 constituents in the green. Nifty has gained 2.1% in the last 4 trading sessions. All sectoral indices trading in the positive as we speak. Overall, it's the PSU banks that are leading the pack, followed by metals and auto. And 6 people hospitalized after ammonia gas leak in a subsea pipe near Chennai. The company updated that they have isolated the ammonia system facility and brought the situation back to normal.
I think if we do something like 4 to 5,000 crores by FY28, I would be kind of disappointed. That would be a lower end of the target, yeah.
And Zen Technologies hits upper circuit after the CMD of the company, Ashok Atluri, said they will be disappointed if they did not meet a revenue target of 4,000 to 5,000 crores by FY28. That's 10 times from FY24. And Adani Group stocks extend gains as promoters look to infuse 9,350 crores into Adani Green to deleverage and to fund a massive capex plan. Hello and welcome. You're watching Hot Money. I'm Hiral Dadia. Let's quickly take a look at how markets are panning at this hour. You have Nifty 50, which has actually hit a life high in today's day of trade. Clearly, we're seeing gains of around 0.7% coming in there. And overall, the sectoral indices also, if you go to see all of them trading in the positive. Bank Nifty, couple of points away from its life high levels. Sensex as well, nearly 130 points away from its life high levels. But clearly, you're seeing outperformance that's coming in from the banking pack, where all the Bank Nifty components are trading in the positive. Overall, apart from this, if you see in terms of stock-specific action as well, let's quickly look at the top gainers in terms of Nifty 50 as we speak. 37 advances and remainder ones are the declines. 11 declines coming in there. Hindalco, Ultratech Cement, Tata Motors, Tata Steel as well as Bajaj Auto. These are the ones which are gaining in trade. And if you see in terms of contribution, you have HDFC Bank, Reliance Industries, Infosys, L&T. These are the ones which are actually contributing to the gains in terms of Nifty 50. On the losing end, few names. TCS is the one which is hogging the limelight. Let's pull up the Sensex as well and see which are the stocks that are contributing to the gains in terms of the Sensex as we speak, because that's going to be an interesting component. That's the next one that will probably hit record high levels soon. 108 points contribution from HDFC Bank coming in there. Reliance Industries, Infosys, ICICI Bank. These are a few of the names which are contributing to the Sensex up move as well in trade today. Let's look at broader markets and see what's happening in the broader markets, because clearly it's majority of the newsmakers. Zen Technologies locked in upper circuit on the back of the conversation the management had with NDTV Profit, clearly indicating that around 400 to 450 odd crores is the kind of revenues they're expecting in FY24, and they will be disappointed if it does not grow over 10 times in FY28. So that's a really courageous statement to make as well. But apart from this, in terms of where other names are concerned, Coromandel International has been trading under pressure, and that's because of that ammonia gas leak that we were watching out for. Aurobindo Pharma, their unit Eugia Pharma has got a US FDA approval, and this is for one of the injections. So these are a few of the newsmakers in trade today, but let's welcome in our guest Sharmila Joshi from sharmilajoshi.com to discuss a few of the stocks that are in focus today. Let's quickly pull that on the screens. Bajaj Finance, Adani Green, Kansai Nerolac, Brigade Enterprises, SJVN. These are a few of the names that we will be watching out for in trade today. Sharmila, good morning and welcome to the show. Let's start with Bajaj Finance. Clearly, with regards to where Bajaj Finance is concerned, overall with regards to where RBL and the combined credit card goes, that was one of the talking points. And what Morgan Stanley has come out and said is that they may have sufficient time to correct the deficiencies. They're expecting operations to continue as usual, and they're expecting a very low impact in terms of where earnings are concerned. Yes, the share price decline may be attributed to the negative sentiment on the regulatory concerns that RBI has highlighted. How are you looking at a Bajaj Finance? Because both of the names, the twins, have been trading under pressure since yesterday.
Yes, absolutely. And, as this has been sort of the talking point, this whole issue with the credit cards. And overall, if you see, I think it's very clear, whether RBI is concerned or they have sort of tightened their rules on a lot of sort of loose ends as far as this whole financial space is concerned. And we've seen the impact across stocks. But, I think that I would still continue to be positive on Bajaj Finance. Simply because, yes, as Morgan Stanley has highlighted that they have enough time and the impact could be minimal. And also in terms of the kind of book that they have and the numbers they've been able to deliver, I think that is very satisfying. And I think thirdly, on a sort of a more macro sort of a level, very honestly, I think, one thing that has changed in the last 15 or 20 days is that we have seen a sort of a resurgence of interest coming from the FIs, and this resurgence and this buying that we've seen will, to my mind, result in better buying in the large caps. So there are a few, the Bajaj twins have always sort of attracted that buying from FIs, and I see that returning. So I think if you have the stock, you simply have to continue holding it, because I do think that as we go ahead and things fall into place for them, there are better days ahead for the company.
Right, so that's with regards to Bajaj twins, and this is clearly on the media reports that credit card tie-up with RBL, and they've granted a one-year extension to Bajaj Finance and RBL Bank's co-branded credit card until December 2024. Clearly, the operations are expected to continue as usual and unlikely to be a material impact on the earnings as well. But moving on, Adani Green, that's an interesting one to watch out for. In fact, the Adanis will pump 9,350 crore rupees into Adani Green Energy. Now, this will be via preferential allotment of warrants. With this, if you go to see, clearly the warrants have been priced at 1,480.75 per share. They've raised approximately $3 billion in equity as well as debt in the last 1 month. Overall, if you see in terms of the use of proceeds, they will be using to repay $750 million loan of the holding company, around 2,338 crore investments in subsidiaries, and the focus will be on the existing as well as the new renewable projects. Around 2,337 odd crores will be used for corporate purposes. Clearly, from an investor perspective, if you go to see GQG, who had acquired Adani Green in Feb at around 504, and the second tranche of the acquisition was done at around 920 rupees per share. So that's the kind of gains that the investors have made as well. Clearly, the funds will be used for deleveraging and to fuel growth. 8 international banks have backed Adani Green with a $1.4 billion facility, and Adani promoters have increased their stake as well by 1.6%. If you just pick up 2023, a YTD chart of Adani Green, you'll see the kind of gains that we've seen on this stock as well. There you go. This year around 16 to 17%, but if you let's pull up a YTD chart as well, because that upside is something that you'll be able to clearly see from March onwards. The up move has started. November, December is the phase where majority gains have come in. Sharmila, what's your view with regards to where Adani Green Energy is concerned?
So after, of course, I think first of all, very good news in terms of everything that you highlighted. Also, I think that Adani Green, that entire business space is something that is going to be on investor focus, and we are seeing that return of attention there in terms of power as a space and definitely green energy. So, these are going to be the businesses to watch for in the future. So, all in all, very good news. And, Adani as a group and Adani Green as a stock has come a full circle from January of this year. So there's no taking away from that. But I think only from a valuation perspective, it's a little highly priced at this point in time. So what I would really recommend is that, yes, if you're buying it now, buy it with a very long-term view in mind. Because, as I said, from a valuation perspective, it looks a little expensive. But the only reason I'm saying buy it from a longer-term perspective is, as I said, these are the businesses that market is going to be looking at very positively in the coming years. So that is the one reason I would say that this stock looks worth investing on the back of this news and the fact that yes, I think overall the way the business is.
Right. Sharmila, another one. Vishnu Prakash is in focus, and this is after they've received a LOA for orders worth almost 900 odd crores from the Uttarakhand government. In fact, we did speak to Sarfaraz Ahmed, the CFO at the company, who talks about the company's order book as well as the execution plans. First, let's listen into a bite of that conversation.
Yes, we have order book in the 30th September. As on 30th September, we have order book of 4,200 crores. And after these orders, it is built up. And due to election, there is a slight delay in payments and all that. But we have, as if you know, that we have 36 years of experience, and we have gone through about 7 to 8 cycles. Then we are familiar with that. And we are going through this project execution and expecting our order book up to 5,000, between 5 to 6,000 crores.
Right. Sharmila, how are you looking at this new listing? Because if you see the performance listing, that's been pretty substantial as well.
Yeah, so I think, really honestly, again, good news. But the only reason why I'd be more circumspect, as compared to Adani Green that we were talking of earlier, I'd say in this case that you need to hold back before you buy, is because it's a new listing. I think that when stocks list and you get the kind of gains that the stock has given you, irrespective of the sector you're in and irrespective of all the good news, I think you need to allow it, I would say, at least 45 days before you really take a call, because that gives people who bought with listing gains, etc., in mind and shorter term movers to move out. And then you can look at it. So, of course, I think the business that they're in is good. The order win is good. All that is fine. But from a valuation perspective, it's expensive. And it has given great returns from the time it listed. So, just allow it a little bit of time to cool off.
And some bit of cooling off is what is required, as Sharmila is mentioning. Sharmila, stay with us. We'll quickly slip into a short break and discuss a lot more other stocks after this once we're back. Stay tuned to NDTV Profit. welcome back. You're watching Hot Money. Now, India's mutual fund assets are close to 50 lakh crores. What does this mean? How has it grown? Alex Matthew joins in with more details in terms of what would this mean, because this clearly tells you where this hot money is moving, Alex.
No, absolutely. You said it. Hot money is where, the mutual fund industry has been experiencing a tremendous growth all of 2023. Now, this was more or less a matter of time before that 50 lakh crore mark was hit, assets under management, because at the end of November, you had assets under management for the industry at 49 lakh crore. And the kind of growth that we've seen over the course of 2023 itself, just to give you some perspective, for the whole assets under management, we've seen a growth of about 23%. Now, for equity, which has been the reason for this propelling of assets under management, you've seen equity AUM swell by as much as 28.6% in that period. As of the end of November, it stood at 19.6 lakh crore. And just in December, you've seen the benchmark indices gain quite substantially. You have the Nifty 50 that's gained about 7.3%, and the mid-cap index over 5%, the small-cap index about 5% or thereabouts. Now, why is this significant? You've seen quite a lot of money flow into the broader end of the spectrum as well. Just in this year so far, as of the end of November, you had upwards of 54,000 or 55,000 crore rupees flow into actively managed small and mid-cap funds, not even talking about the kind of money that is flowing into the passive fund. So that's where the kind of growth is happening. Of course, in the fixed income side also, you've seen growth, not to that extent, but fixed income assets under management have grown about 9.3% in that period. The confirmation of this 50 lakh crore number will come around the 8th of next month, but in all likelihood, Hiral, we have breached that mark.
Right. So in all likelihood, we have reached that mark, and that's what the calculation is indicating. Thank you so much, Alex, for getting us the details. But moving on to stock-specific action, Kansai Nerolac is in focus as well, and they're set to sell land parcel in Lower Parel, Mumbai. Mahima, my colleague, joins us with more details. The stock is seeing gains of almost around 4 to 5% as we speak. Mahima, what do you have for us?
Right, Hiral. So as you rightly mentioned, Kansai Nerolac is set to sell its land in Lower Parel for approximately 726 crores. Now it is selling this to Athen Developers, which is an arm of the Ranwal Group. Now, prior to this, last year in August 2022, the board had approved that it will be selling off lands that are not being used and use the proceeds for the business. And after that, in July 23 also, they sold a land in Thane for approximately 671 crores. We also had a Morgan Stanley note on Kansai Nerolac, where it rated it as underweight with a target price of 250 rupees with a downside of 24%, and this was on the basis backs of that the near-term demand trends are pretty much mixed and the margins remain volatile in the short term. If we talk about the stock performance, the stock has been down 3% in the past 5 days, and the YTD returns of the stocks are 11%, whereas today the maximum intraday high of the stock reached approximately up to 9%. So the stock has nearly gained almost a lot in today's trade. And if we talk about the analyst recommendations, it's a very mixed queue. 11 say buy, 3 say hold, and 6 say sell. So this is all about Nerolac today.
For what? Right. Thanks, Mahima, for getting us the details. How are you looking at the paint industry and specifically a Kansai Nerolac, Sharmila?
So the paint industry has been under some sort of stress because there is like new competition that has entered the space. Having said that, I think that Kansai Nerolac is on a fairly strong sort of wicket. The kind of numbers, and it's been a consistent performer, so it's been one of those stocks that like Asian Paints has sort of always delivered to investors. So I stay positive on the stock, and of course I think if you live in Mumbai and if you know the surrounding regions, what it means because the sort of the real estate development play always happens around what is termed as mill land. So this is sort of an interesting development from that perspective as well. Not just, apart from the paint business. For real estate as a sector, but overall I think that where Kansai Nerolac stands within the paint sector, the pain from the new competition, I think, will now soon be a thing of past. And yes, I think I continue to stay positive on the stock.
Right, that's with regards to where Kansai Nerolac is concerned. Let's quickly slip into a short break. Lots more lined up on the other side as well. Please stay tuned to Hot Money, and you're watching NDTV Profit. Welcome back. You're watching Hot Money. As we saw, you have Nifty, which has actually hit a lifetime high. All sectors trading in the positive. Gurmeet Chadda of Complete Circle joins in. Gurmeet, good afternoon and welcome to the show. Clearly, a life high again in the last three sessions. Do you think this is something which is expected to continue, or you see some bit of profit booking that will start trickling in?
Hi. I think this Santa rally has been, as I said, without much clauses. I think we saw a bit of a I won't even call it a dip on Friday. So some sharp moves will happen, I think, because it's normal if Nifty runs up more than 2,000 points since the state election numbers came in. Some bit of pullback is likely, but markets are like this. It will keep making you look in the short term a little stupid because most of the market commentary has been saying that markets are expensive, and it keeps going up. So in the short term, I think it can humble you, and it may also happen that it may go up another 500 points and then pull back. So it's very difficult to take that call. Although I think a lot would also depend on the January earnings. So if, for example, IT delivers not just numbers but also on the commentary, I think that's something that the market would eagerly be awaiting. And if banks deliver well on last quarter, if bank and IT continue to report good numbers and good outlook, I think there can be some leg up. But there are pockets of market which will see some profit taking, especially in defense related, railway related, small micro caps, some IPOs. I think some rotation will definitely happen.
Gurmeet, hi, this is Samina joining in as well. It's ironic, right? Last Wednesday we were worried about the market seeing profit taking and a sharp fall down, and all that, of course, now in hindsight seems like a small pause that the markets are taken around our life highs as we speak. Now tell me, you talked about earnings, and banking and IT would probably be the first trigger that comes through. How much of this is already in the price, you think?
I agree with you. I think some of the uptake in IT is in the price. Especially the mid-cap IT is actually very expensive if you ask me. The good names are all trading at 40, 50 times, in some cases 60, 70 times. Whether it is Persistent, whether it is Cyient, whether it is, some of the digital engineering and tech players like KPITs of the world. I think the valuations are already on the higher side. Large cap IT also has seen a run up. HCL, crossed 1500, made a new high. Infi, I think there was a deal cancellation on the AI which they announced. So I think that's something market will watch out. So I think TCS and Infosys will probably lead the way. More on commentary, less on earnings. Earnings could still be a little flattish. I think market would want to see whether the commentary is improving or not. So it's very important there. Also, I think some of the agri-related themes, I think, is something with a lot of focus as government announces more measures. I think the agri budget could see significant jump as we head into the election year. So agri input companies, especially which are backward integrated, farm equipment names, tractor names, I think they could come in focus. I think some bit of contrarian approach with pockets which are yet to recover would make sense. So look at, for example, the way HDFC's run up in the last 2 months. For 3 years it was flat and Bank Nifty was up 16-17%. And now it's still way off. So I think some bit of contrarian approach, especially where valuations are reasonable and growth is steady, I think would see some catch-up happening in the market.
With valuations, now that's anybody's guess, and it's also relative at this stage. But quickly, in terms of a portfolio approach, would you be going with market cap allocations, or would it be more sector focused? And I ask you market cap because more than once a number of analysts and market experts have indicated that the broader markets are looking very stretched at this stage, and the activity and the action is in the large cap space. You also implied to that by talking about HDFC. Give me a sense, would your approach be sector specific or market cap focused?
Actually, a bit of both. I'd be more keen, since we run portfolios, we are more of bottom stock pickers, but I think relatively more comfortable in that space. So, for example, an M&M today still trades at 16-17 times trailing, 14-15 times forward. They have a 41% plus market share in tractors with new launches. Their UV market share has climbed back to more than 18 now, back-to-back good SUV launches there as well. Return ratios improving. So obviously you tend to have that in mind versus, let's say, if you want to look at some of the auto ancillaries, which have run up 50-60 times. So I think it is more bottoms up, but in bottoms up also probably I think more ideas are coming in large cap. And we also look at it more in terms of, who are the sector leaders. So let's say, for example, the largest depository, it would be a mid cap. The largest ethanol technology and engineering space, again, would be a mid cap. Our largest tile maker, again, would be a mid cap like Hiral Dadia. So I think you would prefer to be with sector leaders more, I would put it, than market cap leaders, I would there. And within that also, be a little more, valuations focused. For example, today if you want to do paints, a Kansai Narolac is available 25 times versus, let's say, a 50-60 times for Asian Paints or Berger, for example, right? I'm just giving an example. So be more focused on valuations, and within valuations, as I said, little more biased towards sector leaders.
Gurmeet, as we speak right now, if you see the mid-cap and the small-cap index, both of them have actually collapsed. What are you picking up? Though, yes, from the record high on Nifty 50 as well, we've started to see profit booking, but you have the broader markets which have actually got back into the negative.
No, it will happen because that's how if you see small caps and mid caps as a category, last 1 year returns are almost 40%. And this is the very nature of the beast. You may still find Nifty at 21,000-22,000 and small mid cap index down 10-15% in maybe a couple of sessions. So that's the nature of the game. Returns come, they are lumpy, the upside is sharp, so you should be prepared for sharp downsides without people have forgotten 2017-18 where the broader market was flat and small caps corrected 25-30%, in some cases more. So it may happen, and in a lot of cases, the run-up has just been on just flows and flows chasing them, right? So I think some bit of profit taking is normal. So I think incremental deployment should be very, very cautiously done. And if you see, a lot of portfolio managers are now suspending flows in small mid-cap oriented themes, and that's the first sign that the portfolio manager isn't finding out many ideas. So I would tend to be a little conservative there, but I'm not seeing all small cap, all mid caps are floppy. As I said, there are a lot of valuations comfort in those pockets as well, but you got to be very, very selective.
Right. In fact, if you see from an expiry perspective as well, 21,600 is where you're seeing that pressure which is building up. So analysts are expecting that expiry to happen between the 21,500 to 21,600 mark. But one aspect I want to take with you, Gurmeet, is you spoke about that probably there's an anticipation that a 500-point rally from current levels, that could be a possibility. And if that is the scenario, how important will it be for names like Infosys, TCS, RIL and the HDFC Bank to contribute? Because these have been the overall laggards so far.
No, extremely important for any near-term, movement, especially on the upside. I think the heavyweights have to chip in. If you see, for example, last 5 years, Bank Nifty is up to roughly 80% absolute, which is about 13-14%. HDFC Bank would be probably up 15%. So there's a lot of catch-up there. Similarly, RIL, after making 28,2,900 high, it's for last almost 18 months, odd has been pretty flattish. I think the next trigger, in my view, in RIL would be more when you'll probably see more, demerger of entities and value unlocking happening there, which I think is some time away. And IT is extremely important, especially TCS and Inky, which I made the point earlier in the show. So I think I would wait for the January commentary. To me, that's very important, especially for the large cap IT. To see, if it goes up. So between banks and IT, that's almost 50% of the index, right? So that's extremely important in my view for near-term move. But as I said, some correction is not bad, especially if you have been on the sidelines. It's healthy. It removes shocks from the market. And we are in a bull market, and bull market corrections are very sharp. I think so. If you get one, you should be happy getting one rather than being perturbed about it.
Gurmeet, thank you. This is interesting because I know a number of investors have been waiting on the sidelines all the way from the month of September, hoping for a correction, which has not come our way. 5 to 10% is what we're anticipating for a little bit of the dry powder to go back into the markets. Hiral, this is the irony, right? If you've been waiting on the sidelines, hoping that a correction is going to come your way, because we looked expensive even in September, we've pretty much moved in one direction. And I would love to know what is happening with all that money that is still available. Because the minute you see a correction, it's going to find its way back in, I'd imagine.
It will, but the problem over here still, Samina, is that India has now, in the month of September, what you're mentioning, we were the fourth most expensive. We've turned the most expensive in terms of markets right now, right? And in spite of that, you're seeing this kind of upsurge that is coming in. And people are talking about the run-up from state elections to general elections. So the allocation and where that allocation is going to go is going to be important. And you have the mutual fund industry, which is already at a...
we seem to be the sweetest spot in the world. But talking about that, Hiral, and that's why you're seeing sectoral rotation. You saw specialty chemicals do well yesterday, metals today. But I think, we've got to wrap the show up, so I'll leave it to you.
Absolutely. So sectoral rotation, as Samina is mentioning, pharma, I beg your pardon, specialty chemicals is where the money is coming in. FMCG is where the money is coming in. And as Gurmeet was mentioning, defense, these are few of the pockets. Capex-related pockets by the government are seeing a lot of influx that's happening. But completely out of time, that's a wrap on Hot Money. But please stay tuned to NDTV Profit.
welcome to Know Your Company, a special show on NDTV Profit. The show takes you into the shop floor and interacts with the management to give you an insight into the company. Today we are at the Cochin shipyard, and behind me is the majestic indigenous aircraft carrier INS Vikrant, which was built by Cochin Shipyard. We'll discuss this and more and the future plans of Cochin Shipyard with the chairman and managing director of the company, Madhu Nair.
Cochin Shipyard, incorporated in 1972, was one of the first civilian shipyards to be selected by the government to make indigenous aircraft carrier INS Vikrant. It is one of the only shipyards in the country with a dry dock facility that can be used for the construction of large naval ships like the aircraft carrier. The Kerala headquartered shipyard has primarily two functions: shipbuilding and ship repairs. It has 5 facilities in the country at Udupi, Port Blair, Mumbai and Hooghly.